I'm really sorry if this is weird for you because of your experience. It's a little weird, but it's not awful. It's just not something I talk about a lot. Yeah, Holden was bugging me about Noah, and all I could say is there's painful history there. Just leave it alone. It's a very polite way of saying shut up. But why would Holden think he can bug you about anything, much less Noah? Well, I guess I had a face when Noah was around. Holden noticed. Okay, well, A, it is still none of his business. And B, I'm really sorry. Focus. What was that? That's why you gotta tell me you don't want to talk to me anymore, so you can focus more. No, you need to listen to explain finance and like you know. So similar to like wanting to have the library program with somebody from like a bank or something coming. That's what they're gonna talk about. Guess he said forget the do not enter sign. Was that place coming this way? You go right here, and you went back. Really?
Okay, I'm just waiting on Chris to get on. He's actually the one leading the training, and I just texted him. I don't know if he's joining us, so bear with us for just a second. How's everybody doing today? We got a little break in that wet stuff. I think I've met Tracy. Terry, I don't think we've met. Have you been with KW for a while? All right, Chris is going to be logging on.
Yeah, awesome. Thank you. Appreciate it. Where are you?
I, Chris says he's jumping on, so I'll just wait for him. And then Nicole, you can make him the host. No, no, he's not on there yet. Hi, Rachel. There he is.
It wasn't letting me on.
Well, you're late. They locked you out.
You're late, and now I cannot give you hosting privileges.
Oh,
Just kidding, I made
Uh-oh.
you the host.
All right. Well, thank you. But yeah, like it won't let me on like my work laptop.
did you cut your hair?
No, I have braids. I
Oh,
just
okay.
yeah. But all right. Hi. I'm sorry. Yeah. Technology is not my friend right now, and I actually did a full presentation for once. I got a PowerPoint and everything. Sorry, I'm spiraling. Ignore me. But I was actually really excited to do this class with you guys because what I have been seeing right now is that clients, I don't want to necessarily say that they're like on the struggle bus, but it definitely is. There's like some healthy tension when it comes to trying to get the house that they want, the payment that they want. They feel like either their agent is listening to them or they're not, or like they're whoever their lender is like listening, or it's like agent might be listening, but then the lender isn't listening. And so then they want to switch lenders and all those sorts of things. Like last month, I think I personally got 5 deals that really they never started with me. And so like it was because of I don't want to call it bad communication. I was just really bad listening. And so like because of that, like that's where it like kind of made me a little bit more excited to do this. And I will share like my notes with those who are on here. But overall, this is really just like, hey, pouring into agents and just trying to give you an opportunity to where like you can help fill in some gaps where you might see beneficial. Um, and why this matters the most is that like truly more than what I saw 2, 3 years ago, buyers are more payment sensitive now than they were 2 to 3 years ago. And I feel like it's not just rates, it's just their total cost of living. And sometimes like we don't take the time to hear that from them. And that's where like right now is the time to do that, especially now that spring and summer market are essentially upon us. And how right now with rates compared to where they were a year ago, 2 years ago, yes, someone can have more buying power, but is it affordable? And so, like, if I give out a pre approval today and I'll use someone from yesterday, I have asked this woman, I don't know how many times, what she is comfortable with paying per month. She has yet to give me an answer. All she knows is that she has been educated by her agent, who is a newer agent, that it needs to, because of what she's looking for, this is the sale price or her buying power that she needs to land in, which is all fine and dandy. However, when I ran numbers for her on a house that she was interested in yesterday that was at 209, she practically fainted. And she like got really quiet and she was like, "Well, I don't think that I can do that." And that's understandable. But this is so like now that you've seen these numbers, where do we need to put them to make them affordable for you? And I'm glad that we ran the figures before she put in an offer and it was too late. Because agents and like everyone on this call knows that you don't get to necessarily back out due to being like payment shocked. That's not always a good reason. So like rates are, in my opinion, they're in a healthy spot. Could they be better? Yes. But where rates are at right now, if someone isn't so payment conscious, like we've had more deals lately to where, especially like our FHA and USDA loans, to where like some people have opted to go with a slightly higher interest rate to be able to get a credit back from us in a lender credit to help offset their cash due at closing. So from a rate perspective, are they on a teeter-totter still? Yes. But are they somewhat healthy? Yes. And at the right price point and on the right house, people can decide whether or not if it's affordable for them. And so for agents, it's just basically giving you some extra tools to add to your tool belt to say, like, how can I be a partner to my lender and be a real asset to my client to make sure that numbers are being taken care of and making sure that it's at the beginning, or even like if they say that, hey, I love this house, like, can we actually make it work based upon whatever their rate is, their payment comfortability, all of that fun stuff. And then also just kind of giving you some creative solutions and ways to keep your buyers in the market instead of having them say, see you later. But on the mortgage landscape of things, if you give someone like my lady from yesterday, she loved this house, but the payment was too high. So she's not going to move forward. And that's okay with me that she's not going to move forward on that house. I would rather her not move forward on that house and still be in it instead of saying, like, hey, I got to back out of this until rates calm down, this, that, and the third. And but having that healthy conversation is a big win, in my opinion. And I just don't know, like, as the industry as a whole, if we're having those conversations enough to making sure that people are making the right decision. Because while, yes, we're experts, and we all have a job title, but at the same token, like, we're really their advisors. They come to us because they were referred to us or they read something about us and they want to build enough rapport with us to be able to trust us to help guide them through this next transition of their life. So yes, inventory remains tight in many markets, like, we know that, but there's also a lot more homes coming on the market. But for all of our people who have been sitting on the sidelines and waiting, they're also getting the shock factor that they now have more competition. And does that suck? I don't know from an agent perspective, because I'm not showing these people, 20, 30, 40 homes. Like, but agents are sometimes. Like, I have one partner who she showed 53 houses before they found a house. And it was all because of payment. And that's just a lot, in my opinion. But like, it's not my gas or anything. And I know that I ran numbers on 53 properties for this couple. And how do you have more meaningful and intentional conversations up front, or like even after you've been through like your first 10 and you're just like, hey, like, let's go back to the drawing board and making sure that, like, this is your location that you want. Have you had a conversation with, your lender? What is your real max payment comfort level and those sorts of things? And I don't think that people are going to find anything wrong with you asking those questions to them, because they don't want their time wasted. They also don't want to buy the wrong home, but like, you don't want to waste your time either. And like, I just think that that's fair and valid. It's just respecting both sides of the fence and making sure that you get them in the right house, and then they don't turn around 6 months later and say, hey, I can't afford to live here. And because, like, no one wants that. Uh, and when you do have those conversations, I believe that from most buyers, they are comparing all of their options a little bit more carefully. So, like, sometimes while it might seem like they're dragging their feet a little bit, they are willing to listen and trust you as their advisor from an agent perspective, from our side of the fence, like as a financial piece of this, and saying, like, hey, I appreciate you taking the time to have these conversations. So that way I'm moving in the right direction. And that's today's landscape. And it really just all kind of centers around clear communication. Then for the next part is that, and I don't know, like, and Kayla, you can chime in if you would like, when it comes down to a contract and you're just like, hey, is it time to lock in an interest rate now? Or do you say, hey, like we're going to float it based upon your concerns? Because it's like we're right there on the cusp, but like for an example, if no one knows this, rates are always bad the week of a holiday. Never fails. They just always are. And truthfully, rates are always bad Monday, Tuesday, and they get better Wednesday through Friday. And so, like, if you go under contract on a Friday, and if we don't get that, or if we do get it that day, then yes, it might make sense. But if we don't get it, I'm not locking in that person's interest rate that Monday or Tuesday when we do get the documents and all of that stuff going. I just was like, I will tell them right now, like, we're going to float it unless we're having a really good pricing day, or if the market looks like it's shifting backwards, then we'll do it. But outside of that, I just tell them that, hey, like, today's just not the best day to lock in this interest rate because of what I saw last Wednesday and or whatever I saw on Friday. We'll see like where the market goes. Do you feel like you locked them in immediately, Kayla? You got to unmute yourself.
Here
There you
I
go.
am. I I try to make sure like they can see the pricing. Like if it takes a couple of points to guarantee that rate, and then we know like there's always a chance of it going up. So if you're gonna flip a coin, it's 50-50. Are you comfortable in this payment right now? Then let's go ahead and put that at ease because we also, and I literally just got off the phone. I had somebody that locked a month ago. Obviously, rates have gotten a lot better and we have a feature that is the float down. So you get a one-time float down. If the rates have improved, like there's a calculation that we have to do. You have to be clear to close. You have to be within 14 days of your closing, but we can potentially offer you better pricing. If you're locked in, it can't get worse, but there's a possibility if everything hits right, it can get better. So I tend to like if the client's comfortable where we're at now, I tend to like to lock them, like you said, probably Tuesday or Wednesday, depending on how the market looks.
Yep. Um, and then the next side of that is that like I wish that we as a whole industry don't worry about a loan program type. Okay. So it all boils down to is that what loan product or program actually truly makes the most sense for the client. You can have someone who has really good credit, but maybe they just don't have the most money. And so because they don't have 10, 15, 20% to put down, sometimes like depending on the location, like USDA is their way to go. Like FHA is their way to go. I always push for a VA loan for a vet as long as they don't have the funding fee. If they are exempt from the funding fee, fully take advantage of it. And for any time that like, and I can help the agents learn more about this, but anytime like you as an agent, you do a VA loan, like your Keller Home Loans makes a donation back to like essentially your area to veterans in need. And so it doesn't come out of your commission, it doesn't come out of anything else, but like we make a donation to like local like companies and nonprofits who actually help veterans. So if you're like Tracy, if you're working a lot in Alliance, we'll basically, and you do send me or whoever a lead and that person is a vet, then like we're going to make a donation based upon the loan amount and everything like that towards something locally in Alliance that actually strives to help veterans. Conventional loans are just not always the way to go. And I say that because sometimes it just doesn't make sense. Like I have someone right now who they want to buy in the 450 range, but their debt to income ratio is so high that the only way to really make that happen is for them to do a FHA loan. Now, a lot of times when you're in that price range, you don't have a lot of the repair requests and things like that that cause issues, which is nice. But like, don't be afraid of it. And even your peers that you're working with, don't let them fear that, hey, like, this might not work out because this person's FHA. FHA does not mean that this person is like scum. It is literally just an opportunity for people who have higher debt to income ratios, maybe don't have the most money for a down payment, or they might not have the best of credit to be able to move forward on a home purchase. That's all. Like, are the appraisal pieces a little bit more strict? Sure. But if you, as a knowledgeable agent, if you're walking through these properties and you see that, hey, this might be an issue, like address it like you normally would, or wait till like they do their home inspection and then address it. You don't always have to wait for an appraisal to happen for something to be addressed if you are knowledgeable about the things that FHA could potentially call from the get-go. Um, but then the other layer to creative solutions is like all of your non-QM products. We've done more bank statement loans, DSCR loans, and like asset depletion loans over the last few months than like we really did all last year. And Kayla's laughing because she has four of them recently. And but there's nothing wrong with them, and they're really not that hard. Setting them up on our end is the hardest part. And but beyond that, why not give your clients who maybe they are self-employed and they make a lot of money, but they write it down to nothing. Or if it's just not the cleanest income, but like deposits are clean, all of that, give them an option. Or if you have an investor and they're just like, hey, I want to keep buying and I have this, but like I'm at the max finance property limit and I don't have enough cash to continue to pay for things for cash, then like DSCR is the way to go. Those sorts of things that help you make more, get more units, you make more money, and your trusted lender partners are there to be able to help you achieve those things. Down payment assistance, don't shy away from those. Sometimes down payment assistance is the only way that you can get a deal done. And that's okay. Like, use it to your advantage, especially if you have someone who does have money and maybe you try to get seller concessions for their closing cost. And the seller is like, hey, like, this is my bottom line, that number I need to hit. We know that it's not going to appraise for over that. Don't be afraid to say, like, hey, Kayla, can we use X down payment assistance program or whatever the case might be? And if there's enough money there to bridge that gap, you get to keep your deal. And like your client gets to get their house and everyone wins. So it's just like thinking outside the box for your clients who have been denied or your clients who have been on the fence, or the next client that you stumble upon who is like unsure, like let them have a conversation, or like if they fill you in because you've had that intentional conversation up front and like you call one of us and say, hey, like what options would you have available for this person's situation specifically? These are the details that they gave me. Can this be something that we can make work? Easy. And like there's just outside of commercial things, when it comes to residential lending, there just isn't much that we can't do. And like we will always put in the man hours to figure out a way to make it work. And there's no doubt about that. Now, here's kind of back to the beginning a little, is that buyers are delaying decisions. Like I had a closing today, and what they thought that they wanted is not at all what they ended up buying. And but had they not taken time to like clearly think through that, I don't know like what would have happened because like they felt rushed based upon the demand of the market. And thankfully, the house that they ended up securing, they were the only offer. They didn't have to do anything crazy to make it work. And it was, I think, $75,000 under like their max buying power. but like to be able to secure a house in the area that they wanted at $650,000 was like a dream come true to them. And the most expensive house that these people had ever lived in before it has not been worth more than 150 grand. And so like when I saw that, not I had lots of questions because it's like you're going to a completely different lifestyle. Like, are we ready for this? And they were just like, yes, but this is why we're taking our time and we're not just going to jump into this no matter how much we say that we love a house. And that's okay. And it ended up working out for him. But like I think we worked together for almost 3 months before something happened. And that's okay. But we also know that when you're looking in Stark County at least, $650,000 properties don't come on the market every single day. And when they do, like sometimes they're just overpriced, or like they come with HOAs, or they come with not a lot of land to go with them, or like they can be really dated. That's just not what happened to these guys because they delayed and they were patient and they just kept looking and they didn't get discouraged. And like I think that that's where lenders and agents can work together to be like their cheerleaders to help keep them going and keep them in the game. Just because we can't control inventory, but what we can control is knowing that when our client says that, hey, this is what I want, this is what I need, we can do our freaking best to make sure that we can exceed those expectations and be supportive to them. And then another piece to be mindful of is just the financial side of it, is that what I see on a day-to-day basis, buyers are in so much debt, and it's like alarming. Like my average client, because of where like my price points are, like, and most of my clients are like my average loan amount is like high threes. Because of that, the majority of them easily have 20 to $50,000 in unsecured like credit card debt or like personal loans. They are living beyond their means. And so now a lot of those people need to sell a house in order to buy a house. But I have to have the conversation with them and say, hey, we really do need to make best use of your cash, because now you're going from this house that was, in the high twos, low threes, and you want to buy a house that's in the fives, sixes, and sevens. That's a beautiful thing. I love that for you. However, you're also paying well over $1,000 a month in unsecured debt, some of them $2,000. So if you're selling your house for X number, you don't need to throw every dollar at this new house. What you need to do is get rid of this unsecured debt, making sure that you've taken the time to put together a real budget, to making sure that like you don't end up in the same situation that you're in now with an even more expensive mortgage payment. And so like they're stretching themselves in areas that could be avoided. But now that they have their net proceeds to play with, how do you hit the reset button with them? And sometimes it just takes an outsider's perspective to see their credit and say, hey, like, this is what I think we should be doing. And I used to have a boss years and years ago who would say, like, looking at someone's credit is like, and how they look at it is basically whether they love their body or not. But immediately, like when you step out of the shower and then like there's a stranger standing there. And it's like, I never looked at it that way until she pointed it out. And I was like, that's true. Especially like if there's anything on there, like you might be embarrassed about. But like when you're applying for a house, like we get to see every nook and cranny. Like we just do. We get to see the good, the bad, and like where life kind of shifted. And then it's up to them to fill us in and tell us why. And like, so if you've had a lot of updates that you've done to your house, and that's why you can now sell it at the price point that you're selling it at, that's great. I love that for you. But you don't want to take that new debt, that old debt with you to your new house. If you had some medical things, or if they went through a divorce, whatever, you don't need to take the old baggage with you. And so if you're making enough money and like netting, get rid of it. And I don't think that there's anything wrong with an agent having that conversation with their client up front to say, okay, you don't need a new car, but like your car payment is $650. This is where you want to be at price point wise. So, like, this is what you're netting. Can we still have X amount to put down? Do you need to pay off this car? Do you need to get rid of this credit card? Whatever, in order to like let you help them buy the house of their dreams. That conversation is so meaningful to them and it's helpful. Like, don't be afraid to have it. We have it a lot. And but like if they're hearing that same conversation just with a different voice, it's not going to hurt. And then, but also like if because you guys have your consultation first most of the time, when they come to us, they can say, hey, like I talked to Tracy or I talked to Terry, I talked to Rachel, and this is how much they say that I'm potentially going to net if I sell my house. This is what I can do. Like, can you help me fill in like the missing pieces to this and say, like, yes, is this really achievable at my target buying power goal? No harm, no foul. It's the easiest way to do it. And it kind of helps break down the walls a little bit because like they see us as like I don't know this intimidating conversation and but then when they know that you have referred them to someone that you know like and trust it and then you help them with a game plan based upon whatever numbers you're seeing then they can easily walk into that conversation just a little bit more confident and they can say, hey, like I had a great consultation. Here's the roadmap or the game plan that we put together. Like, can you help me really see this through from the financial side? But if it's a first time home buyer, again, do they need to hold on to some of their cash because maybe their car is falling apart and they might need a new car? Or they've shared with you that they have some debt. Do they need to make those changes? Um, and like, can you help them do it? So then when they do come to us, they know to ask for down payment assistance. They know that say like, hey, this is how much I'm willing to commit to the transaction. They know all these things up front, and we're just really there to be like, heck yeah, you are on the right track. Let's have a completed application. We can do X, Y, and Z and like move forward. It's a beautiful thing when it can go that way. Um, then your other part to this is that to win a deal, everyone is like, do we waive inspections? Do we do this? Do we do that? Every house is different. And so I highly encourage you. I don't care if it's me, if it's Kayla, I don't care if it's Joe Schmo from ABC Bank. Have the conversation with the lender when a loan is involved before an offer is written. Because do you have the ability to ask for concessions to just lower out of pocket cost, help with like a temporary buy down, or help with just paying points up front to be able to get them a better rate? Or like, is there any wiggle room for a lender credit if they're, going back to the down payment assistance, those sorts of things? Or even if they find a house, they love it, but it's 20 grand over their buying power. Or like my kid from last night, and it was $130,000 over his pre-approval. Like, okay, that's cool. Let's go. Uh, I mean, we made it work, but we had to add his wife that he was like a hard no on. But like adding her additional $3,000 a month in income, he was able to do it and they won the bid last night. But like that's where if you say, hey, yeah, sure, and it's just a simple phone call of like, okay, well, no, Chris said that you can't go up 130 grand, so I need you to call Joe Schmo from ABC Bank and see what he says. Like sometimes that just doesn't always work. And don't get me wrong, I've received deals that way. But at the same time, I would have respected a lot more whether if I had the client from the beginning or if the agent sent me a text, called me and said, hey, like this person, this is what they want. Is there any way to like add a co-borrower? If we got this amount in concessions, if we did this, or we did that, truly strategize. And like, you have to be calculated sometimes on these deals. And does that make a difference to help them get what they want? Because just as much as you want that win, we want the win, the client wants to win, everyone wants to win. It's not about working against each other. It's just partnering with people who you can really have a strong relationship with, and you can just win more deals. It's basically kind of what it boils down to. And communication is key. And I don't think that there's a single deal that I have done in the last year that we have not had a conversation before a contract was written. Unless I got the deal because it fell through or it didn't work with someone else. But any client that I have started with from the beginning, I've never not had a call with them and their agent to strategize before anything was written up. Temporary buy downs, they are helpful. But like just know that your client still has to qualify. If that rate is 6.875, they're qualifying off of that 6.875. But if it does mean that they have faith that the market is going to get better and they get to buy down their rate for like the first year, 2, 3 years, beautiful. So like don't be afraid about that. But if they ask, that it's doable. And I can tell you, you need to have a conversation with your lender ahead of time if that is the path that you are wanting to go, because the seller does have to sign a document for it. Because it can't exceed whatever. If you ask for, I don't know, $6,000 in concessions, but the buy down amount is $5,938.22, that's all that can be listed on that form. And that's just essentially the upfront interest. And the buyer signs it and the seller signs it. So you don't have to have that form available when you win the offer, but you can at least strategize and calculate what those figures need to be. So then when you do win it, it's really not anything different to a seller. It's just like, hey, this is what the seller credit is going towards, and they just get to sign it. And that's all. Now, I do know that seller concessions doesn't always work. And so your closing cost strategy, when you have someone who's tight on funds, you don't, what I can tell you what to do is, instead of writing a flat $7,000 in closing costs, it needs to be written as buyer and seller agrees to pay up to $7,000. Because if it doesn't appraise for that, for what we needed to appraise for, you don't have to go back and redo anything. If their closing costs come to $6,600, you still don't have to do anything. Just means that the seller's going to get a little bit of money back, since it says up to. If you have wiggle room there, you can use part of that money to make an amendment to your contract and use that amount to go towards a home warranty. You can do those sorts of things, even though it's not always easy to do to win a deal, especially when you're in multiples. But you will know right away what your buyer needs. And if you're in multiples, you got to fight like hell to make it happen. And, or you just have to advise your client and say, hey, on this home specifically, we weren't the first offer. I don't even know if we're going to be the last highest and best offer. We may or may not win, but like, you got to give it all you got if this is the house you want and these are your needs. And especially if down payment assistance is not an option. Or in that moment, that's where, when you're in the multiples and we know that we need that money, you go back and say, hey, Chris, we're in multiples. There's nothing I can do to get this to go through. Can we use some form of assistance, or is there anything like on your side of the fence that like can be done to make it happen? Or if you need $7,000, all you can get is 5, still the same situation. Collaboration is everything. It's basically gold to make sure that everyone gets a win. Now, for these flexible, non-traditional loans. I just kind of wanted to go through them a little bit more. Bank statement loans are not the devil. DSCR loans are not the devil. Asset based and those sorts of things, like they're not Satan. Okay. Sometimes they can be your best friend for any self-employed person or your people who receive a salary plus even if they have like their own little side gig. And so like if they have a side hustle or even like if it's an agent who they work full time at, we'll just use Rachel as a guinea pig. But like she worked full time at a school, and this is not a real life scenario for her, by the way. She worked full time at a school, but she is also a licensed agent. If she needed to buy another property, and depending on how consistent or inconsistent her real estate business is, does that would it have made a difference based upon like and say, hey, like we can say yes to Rachel by doing a bank statement loan because she is, even if it's like she has deposits every other month for real estate, but then in addition to that, she has payroll deposits. You can make that deal work. And Rachel gets to win, and she's able to say, yes, I am thankfully able to go out and purchase a home. There are more buyers out there like that than there are not. And more people these days are entrepreneurs and they have this self-employed income and they're not. I have a guy that I talked to this morning. His business made 400 and like 70 some $1,000. He has the best CPA in the world to where like I want to call this lady. They wrote his income down to 14 grand. $14,000. He wants to buy a $400,000 house. You can't buy a $400,000 house with showing only 14 grand in income. The only way to make his deal work is to do a bank statement loan. And there is nothing wrong with that. And he was like pooping bricks, said that he was terrified to talk to me because he was like, there's no way that you're going to be able to say, hey, you can buy a house. And the last thing that he wanted was to have his parents co-sign for him. And I said, you don't need to. Like, this is what we're going to do. And he did not believe it at all. I don't know how many times he asked me if I was serious, but I was like, I'm dead serious. There's no reason to lie to you. This is what we're doing, as long as you are okay with these terms, and so on and so forth. He was. He didn't have any issue with it at all. And it's just being able to know these things about your clients, because if you looked at him, you wouldn't know that he wrote his income down to $14,000. You wouldn't know that. I wouldn't have expected for him to own the type of business that he owns either. But like those are just like, I don't need those tax returns. I don't need any of that. I just need 12 months worth of bank statements. And he got it to me, and he's pre-approved, and he can go out and buy the house that he wants without anything additional crazy happening because his deposits are consistent. And there's nothing wrong with that. So know who your client is, and like the people on this call, like if you're not working with self-employed people or you're not working with someone who has like a side hustle and they just are your traditional W-2 people, that's fine and dandy. Sometimes like if the other way around that is that if you have someone who has a decent size down payment, but maybe they haven't received overtime long enough, you can still do a bank statement loan for someone who has W-2 income. And if they are getting a crazy amount of overtime pay or they get bonuses, whatever, you can still use it from that manner. Now your down payment requirements are different, which is totally okay. But if you have someone who is in a better situation to where like they have a decent down payment, you know that they have good credit, it does not mean that they have to wait 2 full years in order to make these things happen, as long as we can see 12 months worth of statements and it makes sense. If you have your elderly clients who want to buy, but they're on this fixed income, but they have millions of dollars in investments, do you get to use asset depletion and still help them buy what they want to buy? Last year, all of my big price points, for the most part, like they were all 65 and older like clients who are on Social Security or they get a small pension, but easily had $1 million plus in different investments that they're not taking disbursements from. But you get to use 70% of that income and divide it out over the loan term, and that just goes in as income for them. So that helps them buy what they want to buy. And that's easy. It's easy to do, and it's very nice because at any point in time, we know, or at least when they get a little bit older, they can take disbursements from that. And like it's all fine and dandy. There's no harm, no foul in it. But it's like getting to know your client just a little bit better, in my opinion. And you don't have to be afraid from asking them those questions. Then your next thing is that like your deal killers, don't be, here's where it's helpful. You really want a full pre-approval. Not that none of you didn't know that. But you want to make sure that someone has truly looked at the income, looked at their assets, and looked at their credit and not just winging it. You don't, you, if they tell you, hey, I need a new car, they need to go get that new car before they buy a house. Like, bottom line, like, or if they show up to your open house and like the muffler's hanging off and like all the things, and that's part of their conversation. They're just like, oh, like I'm tired of renting, but like I desperately need a new vehicle. It's okay to say, hey, like you do need a car. You need to have reliable transportation. We need you to be able to get back and forth to work in order to afford this house, the next house, whatever. Go get that before you actually apply for a mortgage. Don't do it in the middle of it, or tell them to wait. They can, if they can hold on and we know that we can quickly help them, then they can wait and then they go get the new car afterwards. Job changes. Adam, he's not on here, but Adam had a guy quit his job and not tell anyone. Quit his job, and Adam's like, hey, we're struggling getting employment verification for you, so on and so forth. And the guy was like, I don't know why, gave Adam a bunch of different phone numbers, but he had quit his job. Like he wasn't working. So then what? And thankfully, his wife, who was not on the loan, she was like, well, I work. She didn't quit or anything, but like she was able to be added and it saved a deal. But now in this situation, the agent knew that this buyer had quit their job and it was a new relationship between this person and Adam, but no one felt the need to tell Adam that this person had quit. And like to us, that's like major red flag on like just a deal in general. Were we able to save it? Yes. Did Adam get quite a few gray hairs from it? Absolutely. But like it worked. Then advise your clients as well on like watching out for large deposits. If they are pre-approved for, just to make numbers simple, if they are pre-approved for 250, they're putting down $50,000. They cannot have a large deposit in their bank account in one day or in one transaction greater than $2,000. It cannot be $2,000.38. It cannot be greater than $2,000. It cannot be greater than 1% of their loan amount, but also it cannot be greater than 50% of their monthly and like gross income. So if they're making $5,000 a month, then we're still going to go back to that large deposit should not be over $2,000 because that's 1% of their loan amount. But then on the flip side of it, it really can't be over $2,500 because that's 50% of their monthly gross income. So if they do have those things and they say, hey, like I have X amount in cash here that I want to use towards this transaction, they can use it for their inspections. They can go and strategically deposit that money, but not in one day. They can hold off until the deal is done. Those things to where like you have to be careful on what you tell them, what we tell them, but if they have 5 grand sitting under their mattress, they can't go to the bank tomorrow and just deposit it thinking that it can be used. And it is unfortunate that people think that that's what can be done with it, because to them it's like, hey, this is my money, and I love that for them. But just randomly depositing that is a red flag for lending purposes. So like they can't do it. And whether you tell them or we tell them, someone's going to tell them and say like, hey, here's your hard truth, and you can't do it. So there's that. Uh, you really want to make sure that, and I will say this all the time, whoever you partner with, it's more than knowing, liking, and trusting them. It's really, yes, those 3 things are very important, but like, can you build enough rapport with them to where if they called you because they're winning in life, you will answer the phone. If they call you because their whole world just shattered and they just need a 5 minute pep talk from someone, you will answer the phone. If your kids are the same ages and this, that, and the other, like, and if you're bored over summer vacation and you could just say, hey, like, can we meet up at the park and whatever, that's who you partner with. People who like you get to build your avatar. And if that avatar is someone on my team, if it's someone at a different financial institution, I'm okay with that. Obviously, selfishly, I would love if it was someone on my team. But you partner with those people because if anything goes wrong in a transaction, there's you will have healthy tension, but you won't have to where like you can say like, oh, I should have never sent this person to this lender, should have never done X, Y, and Z, because whatever is done, you know that it wasn't like an intentional, careless mistake. And you can say, like, I know Kayla, and like I don't know what happened, how we missed it, but like you can talk through it. And but then if even if like an appraisal comes back short and you're trying to figure things out, lenders are 9 times out of 10, they're terrified to make that phone call or send that email. They just are. And but I can promise you one thing, from people who they have solid relationships with, it's an uncomfortable conversation, but they're not terrified, like as if everything is going to fall apart. They just know that collectively they can work together and still pull the deal through to make it a win for everyone. And like to me, that's more important than, oh, Kayla and I did a transaction together, or Kayla and I closed 5 deals together. That's great, but if any of them had turned out to be a disaster, you would never work together ever again, because yeah, you've seen her at the office, you've heard good things about her, you've had some great conversations, but like you haven't gotten to know each other on like a real level to say like, I really trust this person and I can communicate with this person like on a friendly level, but still be professional. And I know that things can work no matter what essentially comes our way. And that's just how a partnership should be formed. To making sure that like your clients can feel that. And to me, conference calls with clients are really helpful. But when you don't know the lender, you don't get to do that, or there's just like awkward silence, and no one enjoys awkward silence. Like you just don't. Like it's like a bad first date. It just is. And so if you can build that with whoever and send your clients to them, that is what is going to help you in this like economy, in this market, and you'll just win more. And like you'll get a heck of a lot more referrals than you have that you're used to getting, because of who you have partnered with, connected with, and those things. So I like this thing is really more than, hey, this is how you get a deal done. Here are some additional like pieces and that, or I just should say like tools and assets to you to add to your tool belt and your home buyer, education piece of it. But it's like, if nothing else, take this back to whoever you are working with and say, hey, these are some bullet points that this guy made today. And are you able to do these things with me and our clients? And if the answer is no, or if there's hesitation, then that means you need to be interviewing other lenders to making sure that they are the right fit for you and your clients and your business as a whole. Essentially what it boils down to. And if I've ever worked with you and you're just like, hey, you didn't do that for me, tell me, like, and I'll correct it. So that's what you have to do in order to truly win right now. I've seen more people winning deals just by having healthy relationships with their partners and healthy communication, and it's working. And there's no doubt about it. Sometimes you win, sometimes you lose, but if you win together, you rally together, you get to be each other's cheerleaders, you get to be your clients' cheerleaders. And then in return, because you help more clients win, those clients become your cheerleaders and basically at the freaking football stadium cheering and saying, like, hey, this is who I picked, this is who I worked with, work with them. It happens. Um, and like that's essentially our training today. Just find people who you like, add these things like to your buyer packets, tell us what you need, and we'll help you do it. Does anyone have questions? And if you say no, I'm going to cry. Not really. No one? Nothing? Let me cue the Titanic so I can start crying.
I have a question.
Ask away.
With the like the kind of random deposit scenario,
Yeah.
making sure they don't do that. What if they get like a bonus from their company? Does that count as
Nope.
income? That's
Ah,
completely separate thing.
well, it depends on can it be considered income potentially? Like if you have someone who has a history of earning a bonus and we are already like calculating it, we can use that. But if this is they're now working at, I don't know, ABC Trucking, and this is the first time that they got a bonus, we're not including it as income, but they can use it to go towards like their down payment, closing costs, all of that fun stuff. But also like that can be sourced. So like they will get a pay stub or some sort of documentation to prove that it came from ABC Trucking and that it was bonus, sort of a thing.
Okay, I see.
Anyone else? You know, Tracy, I don't know why, but I know that you're not a quiet person. So you didn't have anything for me?
I actually do.
I knew it.
I got a phone call from a client, but do you guys do, because I do a lot of commercial uh apartment buildings and things. Do you guys do more than 4 units or no?
Yes,
Lending.
we can. And it just depends on like what they have going on. But like you can, I think last year the most it had, I want to say it had 10 units was the most that I did. Um, and like, but and I barely got that deal because they were competing against the cash offer, and the cash offer just happened to be like $60,000 under their offer. But like we can do them. They're done through one of our broker partners. Like for an example, like we still operate as like the facilitator, as the loan officer, but yes, we can do them.
Okay, because I got a 14 unit up for sale right now at 1.3 million.
Yeah,
I have a couple investors that has contacted me, and I should I send them your way? Is that
yeah,
something you can do? Okay.
yeah,
Okay.
yeah.
Um, I'm speaking with a couple people, so I'm not sure who they're using for banking, but this is good to know. I didn't think you guys did commercial, but this is good to know.
You know, honestly, until someone had referred that 10 unit to me, I didn't know that we did it. I'm not gonna lie. I had
Okay.
no idea. And then I was on a leadership call and I was complaining and I was like, ugh, I just wish that we could do this. Like this deal would be so nice. And they said, what the heck are you talking about? You can. And I said, with who and how, where? And they gave me the details, and then we were able to do it.
Okay, good to know. I'm happy to hear that.
But yeah, and then Terry, do you have anything for us? And it's okay if you don't. I just want to make sure that you're taken care of.
Yeah, I think I'm good on this. Yeah, very
Okay,
insight.
awesome. Well, if you guys need anything at all, let us know. We're more than happy to connect with you, help you however we can, and just collaboration. That's all I can't say it enough. Just collaborate with the right people that you fit well with and make it work. But I appreciate you guys, and I'm again sorry that I was late. It was not on purpose, I promise. And have a great day.